Hello and welcome to ATFX. My name's Nick Twidale. I'm one of the Chief Market Analysts here. And today we're going to look at the impact of US data this week. Now, normally we do look at one specific data set, but once again, things are a little bit strange at the moment due to the US government shutdown. And also this week, it's going to be a bit of a split week. We've got the US Thanksgiving holiday on Thursday. That tends to have a little bit of a hangover day into Friday. So market impact from risk events looks like it's coming in the next couple of days, and it could be massive. We've got several data sets, and they're coming from that September delayed data. So later on the Tuesday session, we've got PPI numbers and retail sales. And then on the Wednesday session, we've got unemployment, and we've got a couple of other little bits of data coming around. Now, certain products in the financial markets are sitting at very sensitive levels, and we're going to look at some trade opportunities later on. We're going to look at euro, we're going to look at dollar yen, we're going to look at gold, and even at cable as well, because if the dollar really starts moving on the back of some of these data updates, we could see some excellent trading opportunities. First up, let's have a little check at what we've got. PPI is expected to show a 0.3% increase. With the core PPI, some of the more volatile aspects of it showing just a 0.2% increase. At the same time, we get retail sales numbers out. Retail sales is expected to show a 0.4% increase, with the core number a 0.3% increase. We've got to have a little look at what's been going on in the market in recent days, and there has been huge volatility, especially in the market on Fed rate cut expectations. Just a few days ago, in fact, Thursday morning, expectations for a rate cut were down well under 40% from the Fed in December. They have jumped, they've doubled, in fact. They're up to 80% this morning. And there hasn't been a huge change in data. There has been a little bit of a change in some of the indications we've got from Fed members, but to me and to a lot of people out there in the market, that is a massive variation in a central bank rate move expectation without any huge data. Now, the data that we did get last week, we did get mixed jobs numbers. Those non-farm payrolls, don't forget, came in much stronger than expected. We did see a blip up in the unemployment rate, and we did see average hourly earnings drop back, but not to me a significant impact that would suddenly turn the market so dovish. Some of the comments we got from Fed members were a little bit more dovish, particularly New York's Williams. But also we saw from other Fed members that they were kind of remaining a little bit hawkish and certainly less dovish than maybe the market's pricing in. These numbers coming out this week could massively change those expectations and leave some huge trading opportunities. So, as I said, PPI, if we get a stronger hit, we could see that dollar really accelerate, catch that market unawares, and take some of these products into fresh ranges. Obviously, if we see lower numbers, same for retail sales as well, then we could see the dollar retreat. Retail sales also kind of got an added impetus. Not only is it 40 days late, but we're hitting that Thanksgiving Day holiday. And for retailers in the US and, of course, across the rest of the globe, we've got those Black Friday sales and we've got Cyber Monday sales as well. So that anticipation of retail sales numbers and maybe consumer confidence could really drive those numbers. So without any further ado, I'm going to jump over to a couple of charts where we've got some pretty strong trading opportunities coming up. And so here we are on our Euro chart. This is the daily chart, so it gives us a bigger indication of maybe some longer term moves. But as you can see here, and I'm going to bring us in, this is a longer term trend line dating all the way back to those lows back in February. It's coming in nicely around these lows here. If we get stronger numbers, and we've got unemployment claims coming later in the week as well, if we get stronger numbers for the US economy and the market needs to buy dollars, we could see a significant break of this trend line here, these lows, that low's coming in around 114.88, and a break to the downside. We've got previous lows here, 114.68. Could take us down very swiftly to the 200-day moving average. And as you look back on this chart, the next step is probably the lows that we saw down in August, just beneath 114, the figure, and an acceleration through there would take us into some fresh target areas. So euro, potentially great trading opportunity. Obviously, the other side of the coin and the equation is in play as well. Traders can use this to buy against. We're selling dollars, buying euros. It should see a move back up towards this resistance trend line currently coming in around 116, the figure. A break there could easily take us up towards these highs, 116.50, and then a break up towards those 118 levels. So great trading opportunity in euro coming up on the back of this US data. I've now moved across to one of our favorite currency pairs, dollar yen. We've seen some massive moves, of course, in dollar yen recently. It's a steep move up from early October. We moved pretty much from, well, let's take these lows down in mid-September. Where are we here? Down at 145.50-ish. We've gone all the way to 158. Massive moves. It has retreated off these highs, but not too far. And if you were trying to price in this more dovish sentiment, that move from 40% rate cut to 80% rate cut, that has not been reflected, certainly in this currency pair at the moment. So we're sitting just underneath 157. These are levels in play. Highs just around 158. The figure support now coming in around about 155. Perfect opportunity. Obviously, lower numbers, it's going to attack that 155 level. Stronger numbers, it could take it up to 158. And of course, there's that threat of Japanese intervention. They love a thin liquidity market, and that could be coming towards the end of the week. Cable, very similar setup that we had to the euro. Here's that longer term line. Bringing in here, we've got support coming in around 130.50, resistance 130.170. There's a few highs as well, so I'd probably like to see a breakthrough there that would take us up to 133. It would be a really weaker number in the US, I think, would then continue to move up to these 134, 135 levels. Obviously, stronger numbers, we could see a break of this trend line support. These lows here, low here 130.36, these lows just above 130, a consolidated break there. It's only a big figure away, not too much in cable. Could see a big breakdown to support now sitting underneath 128. So great trading opportunities in cable as well coming up. I'll just skip over to our final chart for the day. Looking at gold, obviously we've seen some massive moves in gold over the last few weeks. It's still in this up channel, but we've seen a bit of rangy trade recently. It got a good kick in the a shot in the arm, I should say, rather than a kick in the teeth. It jumped last night, went up about 1.6%. Well, there you go, 1.82% on the day, has held in there nicely. That trend line was respected very well. It was helped by, I suppose, a worsening ceasefire chances in the Ukraine, also by a little bit of dollar negativity, but expect to see moves on this US data coming up. Weaker numbers could see us break to topside ranges. Keep an eye on that Haven trade as well. Stronger numbers should see us revisit this support level there. So plenty coming up this week. As always, if you need anything from ATFX, please do let us know. If you haven't subscribed, hit subscribe in the channel, and good luck with your trading. Thank you very much.